Hi, everyone. Welcome to the Investor Alliance webinar on BankTrack's 2019 Human Rights Benchmark. This is Sarah Blackwell. I'm Associate Director here at the Investor Alliance, and we are going to wait just about 2 minutes as give folks a chance to trickle in, and then we'll go ahead and get started. So thanks for your patience. So once again, welcome everyone. We're just going to wait 1 more minute to let participants join, and then we'll get started. Okay, great. So we'll go ahead and get started. Once again, welcome. This is Sarah Blackwell, Associate Director at the Investor Alliance. Really excited to have the opportunity to host this webinar today. We are joined by a representative from BankTrack, Ryan Brightwell, who will be giving us a sneak peek preview of BankTrack's upcoming, soon-to-be reported human rights benchmark. And really excited to have Lauren Compare as well, giving us her take from the investor perspective. So just a quick context for the webinar. Here at the Investor Alliance, as many of you know, we have ongoing and growing work in the banking sector. Obviously, a lot of Alliance members and ICCR members have been doing leading work in this space for quite a while, but we're really aiming to coalesce and continue equipping this work from the human rights perspective with various tools, resources, and partnerships. In particular, and as many of you also know, the Alliance very often aims to equip its members with data and guidance in this area via benchmarks. And as you all know quite well, there are a number of benchmarks in the human rights space, looking at various companies in different sectors and evaluating their practices, policies, and performance. The BankTrack webinar fits nicely into this existing initiative of the Alliance trying to highlight the various benchmark findings when possible, even before they come out. And today's webinar is an example of that. And we're excited to add it to our growing list of engagements. Also, just to flag, and as many of you know, the thread throughout the Alliance's work is to work with civil society, and we've been really excited to have a really fruitful collaboration with BankTrack along every aspect of our growing banking work. So as many of you were involved with the Equator Principles review process, really was able to collaborate in a really productive way with BankTrack. And then now we're excited to look at this benchmark as a valuable support for our joint efforts going forward. And Ryan will preview a little bit of some action items and ways that we'll continue collaborating. And then at the end of the webinar, I will share an action item on that specifically. So just to start, as you can see here in the, oh, Anita, sorry, if you could just go back one, we are covering these 3 key objectives, giving you all an opportunity to learn about the benchmarks, methodology, and key findings. Again, hear an initial response from the investor perspective on those findings and the benchmarks methodology, and then to participate amongst this full group in an interactive discussion about how to leverage the benchmarks findings in our actions toward respect for human rights across the banking industry. So great. Anita, if you could go to the next one. So in doing so, here's the flow of the discussion today. I'll wrap up this quick welcome and introduction in the next few minutes. Then we'll hear from Brian Brightwell again of BankTrack, who's a lead author on the benchmark itself, and he'll give about a 20-minute presentation so that we are well informed about the findings and their process. And then I'll turn it to Lauren Compare, who should need no introduction, a lead member within the Alliance and ICCR of Boston Common Asset Management, just kick off the discussion and give her reflections. And then we'll open it up for questions and answers, and I'll facilitate that. So just to pause on this slide for a second, a couple of key logistical aspects. So who's on the call? It's really the bulk of participants today are our members, Alliance members, and then we have a few key ally organizations as well joining us. For instance, a few NGO partners and funders as well. We are recording the webinar and we'll be posting it on the Alliance website, so it will end up being publicly available. So that's just something to keep in mind. You can keep yourself muted throughout. Please don't touch your mute and unmute function. Anita from our team will be leading on that functionality, so you don't have to worry about it. Anita is leading and managing all of that along the way. And just to say thank you, Anita, for your support of this webinar. The last piece is that there are two ways to participate in the question and answers aspect of the webinar, and you can participate in either of these ways at any moment. You don't have to wait till that Q&A session to be started. At any moment, you can either use the questions function within the GoToWebinar side panel. You can drop a question there, and we will receive it. And once we get to the question and answer section, I will read that question and throw it over to our speakers to answer. So that's one way if you'd like to type it in. And then the second way is if you would like to verbally share your question, you can use the raise hand function. That should be hopefully clearly available on the GoToWebinar panel. Just click that. We will be able to see that you've raised your hand. And then once I get to the Q&A facilitation, I will cue you, and Anita will unmute you so you can share your question. So please, for either of those, feel free to participate in either way at any point. So yeah, with that, we're really excited and very lucky to have both Ryan and Lauren participating. We thank you both for taking the time. And Ryan, I will throw it to you.
Thanks very much, Sarah, for the introduction, and thanks for joining, everyone. So this is an exclusive run-through and presentation of the results of our new human rights benchmark, which will be published next Tuesday next week. I wanted to emphasize that since this is the results that I'm sharing today aren't yet published, please do consider all of this under embargo for now. I want to start on the next slide, please, by giving a quick overview of BankTrack and our human rights campaign. So BankTrack is a civil society organization. We're based in the Netherlands, but we're focused on the commercial banking sector globally. We were founded in 2003, and our mission is to stop banks from financing harmful business activities, to promote a banking sector that respects human rights and contributes to just societies and a healthy planet, and support fellow civil society organizations in their engagement with banks. And human rights have been a core part of our campaigning since we began. And since the UN Guiding Principles were endorsed in 2011, our focus has been on advocating for their full implementation by the banking sector. So benchmarking is a core stream of this work, and our first benchmarking report came out in 2014 as part of a conviction that it was time for the banking sector to move beyond discussing what the principles mean in theory and to actually get on with implementing them in practice. So really designed to move the focus of the discussion from from theory to practice. Benchmarking is not the only aspect of our work on human rights, and to put this in a bit of context, we also work on what we call dodgy deals, companies and projects that we profile on our website with severe environmental and social impacts. And we've published 3 human rights impact briefings, which examine bank finance for specific dodgy deals, and have called on the banks to outline publicly how they're implementing the UN guiding principles in practice when it comes to these specific problematic deals. We also engage with banks with sector initiatives, including the TUN group of banks, the OECD process on responsible business conduct in the finance sector, which recently published its paper on recommendations for lending and underwriting, for which we were an advisory group member, and also initiatives like the Equator Principles and the Principles for Responsible Banking. And more recently, we've been publishing a series of briefings on specific policy areas of relevance to human rights, including client confidentiality and grievance mechanisms. And you can find links to some of this work in the PowerPoint presentation, which I think has been circulated. So moving on to the next slide, and the topic of today's webinar, the results of our new benchmark. To just set out the scope and the criteria briefly, the benchmark covers 50 of the largest private sector banks globally. We selected the largest banks in the world by assets under management. We removed some without substantial involvement in commercial banking and made some adjustments for geographic balance, and to make sure that we covered the largest banks in key countries. And we've assessed these 50 banks against 14 criteria based closely on the text of the UN guiding principles, wherever they create responsibilities for business. So our aim is very simply to look at what the UN guiding principles say that businesses should be doing and ask, are banks showing that they're doing this? And we give a score of 1, a half, or 0 against each of these 14 criteria. And the criteria look at policies on human rights, banks' processes for human rights due diligence, banks' human rights reporting, and their processes for remedying adverse impacts, including their grievance mechanisms. We started with 12 criteria in 2016, our last benchmarking report, and we made small revisions to some of these criteria following a consultation process, including adding 2 new criteria, looking at whether banks have a process to consider when they contributed to an adverse human rights impact, and looking at their indicators in their reporting. And I'll look more at each of these criteria later in the presentation. So next slide, please. So just to set out briefly our processes and timescales for this report, we started by informing the 50 banks of the benchmark and sending them the draft criteria that they were going to be assessed against. And then in the summer, scored the banks against the 14 criteria, so making 700 scoring decisions, 14 for each of the 50 banks. Credit has to go to my colleague Naomi Geelan here, who worked on the scoring together with me. And we sent each of the banks the draft scores in August of this year, giving them a few weeks to comment on the scores. And we received comments on draft scores from 29 out of the 50 banks that we covered, and a couple, 4 in fact, responded to say they had no comments, leaving 17 banks that we didn't hear from at all. We also worked for the first time this year with an independent academic advisory panel, who we sent a set of scoring dilemmas for the panelists to give input into whether they agreed or disagreed with our draft scores. And we then finalized these scores on the basis of this bank feedback and the input from the academic panel. Next slide, please. So also this year, for the first time, We've tried to be much more transparent about the full results of the benchmark, and for the first time we're publishing not just the full scores for each bank, but our rationale for each scoring decision, together with the bank's comments. They've been informed that they're being asked this year for comments that will be published, and our responses to those comments. So the report will be accompanied by a series of 50 individual web pages setting out these scores and the rationale in full, which will be found in links in the report itself. So moving on to the next slide, and this is the summary table of results. This is where we got to following this process. Don't expect you to read and absorb all of the information on this slide, but just to give an impression. We grouped banks into 4 categories: leaders, front runners, followers, and laggards, based on their scores, as we did in the last year in the 2016 benchmark. We found 21 banks, so the largest group overall are laggards, achieving 3 points or less. This includes all of the Chinese banks that we covered, perhaps more surprisingly, all of the Canadian banks covered. It also includes the likes of Societe Generale in France, Goldman Sachs, and Bank of America. In the US, a further 19 banks were ranked as followers, achieving between 6 points and 3.5. And we then have 9 front runner banks who scored more than 6 but less than 9 points, and 1 leader, ABN AMRO, which scored just over 9 points. So just 10 out of the 50 banks scored more than 6 points out of 14, including the 3 Dutch banks covered in the report, 3 of the 4 Australian banks, plus BBVA, Barclays, Citi, and Nordea. So while these banks are front runners, a key message here is that they all have a lot further to go. And do bear in mind, this report assesses banks against the UN guiding principles, which represent minimal expectations of all companies, and also that it only assesses banks' own disclosures. So this map that's on the screen now shows how these results break down by region. And we can see blue dots for front runners clustering around Europe and Australia, with Asian and to a lesser extent South American banks performing more poorly, and a mixed picture in North America, with the Canadian banks influencing a predominance of red spots there. So I want to move on with the time available to try to look in brief detail at each of the criteria that we examined. I won't be able to go through every one of our 14 criteria, but I want to try and give a sense of the detail of the results. So these are our 3 policy criteria, which look at whether banks have a policy in place, whether it's approved at a high level, and whether it has a scope that includes the impacts of the bank's finance. We see here that most banks now have a policy in place on human rights that includes a clear commitment to respect human rights. This represents an improvement over time, and this is one of the most positive results in the benchmark. The biggest group of banks scores a half point when it comes to policy approval, usually because there is no board member or board committee tasked with specific governance or oversight of human rights. And the largest group of banks does include all aspects of their finance in their policy, although in 17 cases banks are getting a half score here, typically for being unclear about whether their policy extends to asset management as well as lending, or being clear that their policy does only include typically only lending and missing out asset management. We found that was quite common. Our second criteria on the next slide, our second group of criteria, looks at due diligence. This slide looks at our first 3. We have 5 criteria on due diligence, and it looks at whether banks have a human rights due diligence in place, whether it includes consultation, and whether banks clearly allocate responsibility within the organization for specific aspects of due diligence. I should say here, hopefully it's already clear, but the colors, the blue represents the number of banks that achieved a full score on this criteria. The orange or yellow in the middle represents the number of banks that achieved a half score, and the red bar is the banks that achieved no score. So on human rights due diligence, the largest group of banks had a half score, indicating they do have a human rights due diligence policy, or process rather, in place, but that this is limited in scope or poorly described. 2.2, consultation, is a major gap. So none of the banks that we assessed are really fulfilling the requirement to make sure that their due diligence process includes the views of affected people, as the UN guiding principles expect. In 11 cases, they're taking some steps to include the views of affected people, but in no case is that happening in any kind of systematic process. Moving on to the next slide, the remaining 2 criteria on due diligence. There it is. This shows some clear gaps in banks' due diligence. 2.4 is a new criteria this year, looking at whether banks have a process for assessing whether they caused or contributed to an adverse human rights impact, and universally they do not. 4 banks scored half a point here for indicating that they assess whether they caused or contributed to an adverse human rights impact as part of their due diligence, but without detailing the process. This has been a controversial question, whether banks can contribute to an adverse human rights impact, and it's critical because when they do contribute, they have a responsibility to work towards remediating that impact. But it has, with the advent of the new OECD guidance and other papers, also with the participation of the banking sector, it's become widely recognized and accepted in recent years that banks can contribute to human rights abuses through their finance in certain circumstances. So if banks are going to play a role in remedy, they need to have a process for assessing whether or not they have done so, whether they have contributed. Additionally, we found in 2.5 that very few banks are showing any evidence that they track the effectiveness of their response to specific human rights impacts. And we're looking there for evidence of a process that they conduct such a tracking exercise, and for a full score, this tracking exercise should relate to their most severe human rights impacts or risks. Moving on to our third group of criteria on human rights reporting. This also shows some large gaps for the majority of banks. We find really that most banks' human rights reporting is critically underdeveloped. In most cases, reporting is limited to looking at and covering developments like policy revisions or new policies and training given. 32 banks scored a half a point for this kind of level of human rights reporting. 6 banks formally assessed their main human rights impacts and show how they're being addressed. And this mainly refers to banks that follow the UN Guiding Principles reporting framework. Banks are particularly poor at reporting on specific impacts that they found or which have been brought to their attention. Most banks didn't mention specific human rights impacts in their reporting at all. We didn't specifically look for naming names of clients in our criteria, but we were interested to see, as we were reviewing all of these human rights reports, how many banks actually talked about specific projects or companies they financed in connection with a human rights impact. And only 4 banks did so, and in 3 cases, and in 3 of those cases, those banks were referring to the same project, the Dakota Access Pipeline. So we need banks to be both working with their clients to make sure adverse impacts are addressed and talking about how they've done this. Moving on to the last category of of criteria on access to remedy. This is the lowest scoring area of the benchmark. And our first criteria here looks at whether banks have a commitment and a process for remediating adverse human rights impacts or for playing a role in such remediation. We found 11 banks had a commitment, but none had a process for remediating impacts. And then we look at whether banks are meeting their responsibility to establish or participate in a grievance mechanism. We identified one bank, which was NAB, National Australia Bank, that had a grievance mechanism that is open to complaints from affected communities and is supported by some kind of elaborated process. 10 banks had complaints channels, like an email address, that were explicitly open to human rights complaints, but not backed by a process. And none of these banks showed that their grievance mechanism, that they had a grievance mechanism that met effectiveness criteria. So moving on to the next slide, here are those results summarized in terms of the average scores achieved by the 50 banks for each of those criteria. So we can see how the scores are relatively good for policy, but decline when you look at human rights due diligence process, and are poorer again for reporting, and pretty dismal on access to remedy, with low average scores overall. And moving on again to the next slide. This slide looks at how the picture has changed since 2016. The average score has hardly changed at all. If we set aside the addition of 2 new criteria on which banks did quite badly, we see a slightly better picture, with the average score improving from 3.4 out of 12 to 3.7 out of 12, setting aside those 2 new criteria. But this is hard to characterize as anything other than slow progress. 4 banks did improve their scores by more than 3 points, showing that significant improvements are possible with a concerted effort. These were BBVA in Spain, which became a front runner, National Australia Bank, which jumped from being a laggard to a front runner, and Morgan Stanley and Standard Chartered, which improved to become followers from being laggards, all improving by 3.5 or 4 points. So to sort of start to wrap up, some of the key engagement asks that we've identified. Firstly, banks need to be developing and disclosing a human rights policy commitment. In most cases, they have a commitment, but they need action to ensure that they show how the commitment is governed, and particularly show that the board endorses their commitment and has oversight and specific responsibility for human rights. We need banks to start to report on specific impacts in their reporting, including establishing indicators on the number and type of potential and actual human rights risks and impacts that they've identified, and the steps that they're taking to address them. We need banks to prioritize the most severe human rights impacts linked to their activities based on a saliency approach, and detail in their reporting how they're addressing or preventing or mitigating those impacts. And we need banks to start by publicly acknowledging the responsibility to remedy human rights impacts, and detail how they're fulfilling that role, and detail how they're establishing, participating in, and supporting effective grievance mechanisms. And we're 8 years on here from the introduction of the UN Guiding Principles, and this slow level of progress means we need to look beyond voluntary action from banks. We need to encourage regulators to get involved, and if investors do have an opportunity to use their voice to encourage standard setting, and even at a basic level, attention from regulators to the poor results that we're seeing across the board in general on respect for human rights in the banking sector, we encourage that and would like to support it. Finally, I want to emphasize that our results only consider what banks say they do in terms of their published policies and reporting, rather than what banks actually do in terms of their finance. We do work on that outside of our benchmarking reports, of course, And our advice to investors engaging with specific banks is to consider these results alongside our profiles of the banks. We do have active profiles on the BankTrack website of each of the banks covered. And there's a tab on each profile listing the dodgy deals that we're aware of that are linked to each bank. So it's important to bear that in mind together with the policy and disclosure-oriented results of this benchmark. So it just remains to say thank you very much for joining and for listening, and looking forward to continue the conversation here. We'd like to get your feedback on the reports and the methodology, and we're very interested to support and discuss investor engagement with banks on human rights, to discuss strategies in advance and to discuss learnings afterwards. And we hope that participating in this webinar today sort of helps encourage investors to engage and put pressure on banks in their portfolio to move towards full implementation of the UNGPs and to tackle some of the persistent gaps that we have seen to the benefit of rights holders. And feel free to contact me on this email address, and I look forward to the further discussion.
Excellent. Thank you so much, Ryan, for unpacking some of these key findings. I know so much detail and research is in the final report itself, so really appreciate you distilling this all in this webinar today. Just to reiterate, Ryan, it's coming out next Tuesday, is that right?
That's right, yes.
Yeah, this coming Tuesday of next week. So look out for that, and we will for sure within the Alliance be sharing it once it is made public. And I will also flag that in collaboration with Ryan and the BankTrack team, we here at the Investor Alliance have now drafted a statement of support for our investor members and all investors, in fact, to sign on to if once the report is out, there's interest in signing on to that and really being public with investor support for the benchmark findings. And then the Alliance is, of course, happy to support members as they use that statement, use the benchmark findings themselves in doing your direct outreach to portfolio banks. And I'll just reiterate that towards the end of the webinar as well, how that will be shared. So some great action items for you all to participate and support this research. So with that, I'm going to turn it to Lauren. As an investor and from the investor perspective, what does all this mean? Where does it fit in the context of your work? And how can we best use these findings? So Lauren, over to you.
Great, great, thanks. Can you hear me, Sarah?
Yes, yep,
Okay,
you sound great.
First of all, I'll be the first endorser for the investor statement, so don't worry. I'll definitely sign
Excellent,
the
thank you.
statement. So I just wanted to say that publicly. I think, as Ryan highlighted, the UN Guiding Principles have been out for a while. We had a further evolution when the UN Guiding Principles reporting framework came out in 2015. So there is enough guidance, there's enough framing, there's enough best practice out there in terms of what we expect of the banks. I think I'm not surprised to see the results in many ways. I think we've been having the same struggle along the climate front. And in fact, many of the banks that are being benchmarked by BankTrack in this report, we've also benchmarked on climate. And I think it's really important to highlight the fact that environmental and social due diligence need to be coupled together, because I think in a lot of cases, what I've seen with the banks is that they have one track for climate assessment and one track for human rights due diligence. And I think those processes need to be integrated. And it surprised me, actually, on a regional basis, where I saw some of the leaders in the climate finance space, and even including risk assessment and policy development, in France, for example, didn't quite follow. So in some ways, I think it it's important for investors to understand that just because a bank might be doing well on climate, that does not follow, and it's not a proxy for the work they're doing on S or human rights due diligence. I also wanted to share with you, I am not surprised that ABN AMRO is a relative best practice player and the most advanced. Because if I look at the journey that ABN AMRO has taken specifically, and I'm pretty familiar with that company, they were the first, they in fact endorsed the pilot project for the UN Guiding Principles reporting framework, and I think was the first bank to do so. And on top of it, the Dutch banks have really been involved in looking at transparency and traceability around things like commodities that have human rights risks under the Dutch banking covenant. So they have worked collaboratively together to really look at these issues holistically. And in fact, ABN AMRO has also been part of an initiative that I've been following called the Blueprint for Mobilizing Finance Against Slavery and Trafficking that actually just came out with some guidance in September, looking at the positive role that finance can play to combat slavery and trafficking. So just to give you a sense of maybe from a regional differentiation, I think as Ryan pointed out, I see more progress on maybe policy development and some governance. But what we're not seeing, so some practices around human rights due diligence but what we're not seeing is sort of the output of that, right? And we're not really seeing the embedding of these concepts. And frankly, even the alignment between maybe conducting a human rights due diligence and the outcomes in terms of maybe moving away from finance. So I think as investors, as Ryan pointed out, I think we need to really couple what we're seeing on the policy side with actually what they're financing. On the point of remedy, I think it's really important to highlight the fact that I think, especially in some jurisdictions like the U.S., I think the banks are loath to get involved in this because if they're involved in remedy or grievance mechanisms, de facto they're stating that they might have had some contribution. And this is a really, I think, sticky point that we've seen even in the roll-up to the OECD guidance that just came out. This idea that a bank could contribute to human rights abuses, I think is a place where we really, as investors, need to advance the dialogue. And perhaps we need to decouple legal liability from the concept of contribution and remedy. And in fact, I think there are places where actually the the banks themselves can actually contribute to remedy without legal liability. But that's kind of a really sticky wicky issue to get into. What else could I sort of highlight here? I think as we've had with climate, there's a lot of similarities in the lack of progress on banks and looking at human rights due diligence and looking at human rights impacts specifically. And I think because banks typically will really focus on transaction level responsibility. And so there might be a really great kind of human rights due diligence process around specific project finance, though we've seen gaps as many of us know on the Quita principles front. I do think what we need to see banks do, and we've also highlighted this in our dialogues with banks on climate, is that really banks need to look at how to embed from the very beginning, so pre-due diligence, pre-term sheet, this idea of human rights responsibility. And it really should become part of the DNA of when you're initially vetting a transaction or a business relationship all the way through. And in some cases, perhaps what we need to see is not just on the due diligence or risk management side, but perhaps a culture around enabling, underlying clients, whether it's governments or municipalities or corporates, to really look at enabling them to address human rights risks. and from the get-go, and I think establish really a culture within the banks and within the client relationships, from the very beginning to the end. And I think I'll probably stop there. I think it's maybe one or two other points, Sarah, if that's okay.
Sure. Yeah, go for it.
Yeah. Okay. I think again, just as we've done on climate, this idea of prioritization is really important. And I think when we're looking at concepts of salience or prioritization, perhaps the conversation as investors we need to have is really looking at where already there's regulatory influence or regulatory pressure. So, for example, I think if I was going to start in a couple different places in terms of the conversation with banks on high-risk clients, it would be those that are in the extractive sector, those that might be linked to egregious human rights practices in supply chain, for example, like some of the sourcing practices around minerals, cobalt or conflict minerals, concepts around deforestation, also areas where they have where they're either operating or have a lot of client and financing activity in high risk countries. And there are a lot of tools that are already in place that both banks can use and other companies can use in looking at kind of a heat map for human rights, right? So that would be an area I think that we could perhaps, if we, instead of focusing on kind of general due diligence, applying across the board, I do think it's important for us to prioritize that. Another challenge I think we do have, and I'll stop after that, is this idea of what financing role the bank actually plays is really critically important. And this came up in the OECD consultations that we had. This idea that, for example, they might not be a lead partner for a syndication, but they might they might be a sort of a minority player or just sort of not a lead filer, like a minority partner in a syndication loan, for example. And one of the biggest challenges we had with the OECD guidance that came out on bank lending was the fact that the bank who might not be the lead relies on the due diligence player of the lead syndication partner. And we think that that's actually should not be true. We think that it's really important for a bank themselves not to rely on either the human rights due diligence process that client has or of a lead partner, that you should have the same kind of rigor. And frankly, you're going to have to look at places even when you're minority partners or minority players in terms of finance because of the reputation risk. That I know that's a lot to sort of unpack, but I do think that one, it's important to back the findings. It's important to take them into dialogues, and I do think we need to accelerate the conversation on human rights due diligence and the financial sector. Because as equity investors, for example, whether you're a passive or an active manager, finance could be up to 25% of a portfolio. So if you think about the materiality and the potential risk exposure you have, especially given the fact that many jurisdictions are now asking, and the OECD is asking investors to do their own human rights due diligence. The finance sector is a material. You have a material exposure in terms of equities, and frankly, there's also a lot of opportunity to really leverage, given the fact that finance is touching so many sectors. I'll stop there, Sarah. There's so much more I could say, but yes. I want you to make sure. I want to make sure that there's a lot of time for questions.
Great. Excellent. Thank you so much, Lauren. I think such a great call to action towards the end there, the investor case for really looking critically at this sector, the importance of getting involved and using the data such as that we have from the benchmark track benchmark. So great. We are going to turn to question and answers, and we have a good amount trickling in, but feel free to keep adding. I'm going to combine two questions that both relate to the reporting aspect. So Ryan, the first piece I think is really speaking to you, wanting to hear more about the indicators, criteria under the reporting basket within the benchmark itself. So if you could elaborate on that. And then I'm going to combine this with another question that is asking, do we have any anecdotal evidence confirming that self-reporting by banks correlates with what they are actually doing on human rights? And I know both of you touched on this a little bit, but would love your perspectives on how, reporting and performance correlates or not. So Ryan, I think first to you to talk about the indicators piece and any anecdotal evidence you also have.
So in terms of indicators, what we looked for were indicators of how the bank is addressing adverse human rights impacts, whether they're qualitative or quantitative, and well, we found that most banks didn't report indicators. What we found in terms of looking for good practice was, well, I think there was only one bank that received a full score on this criteria, which was Rabobank, which in the Netherlands, which reports quite extensively data on its engagement with clients, including where that engagement relates to human rights impacts and what kind of human rights impacts. So beyond just the number of engagements, and also the status of those engagements. It wasn't presented as a formal human rights performance indicator, but it does present data and information on the type of impacts identified and the progress towards addressing those. So that was probably the most positive indicator that we saw. And other than that, we saw indicators that sort of break down the numbers of human rights engagements by issue, which is useful, but doesn't give us a lot of depth about the status of those engagements and whether they're successful. So I think what we're missing is more richness of information about the types of issues that banks are dealing with, and the status of those issues. And I think this is tied in with the criteria that we looked at on tracking effectiveness, because those indicators will help banks to actually go back to indicators that show them where they've encountered adverse impacts in the past, and look at did our engagement make a difference to whether this impact has been addressed or prevented or mitigated. And in terms, briefly on that second question on reporting, we find a lot of the impacts that we report on the BankTrack website are not covered or acknowledged in banks' human rights reports, and that that also goes for the highest profile impacts and the best performing banks and impacts where we've contacted the bank directly, so they can report about it on that basis. So we are seeing a disconnect there, I would say.
Thanks, Ryan. Lauren, any reflections on that reporting piece? I know earlier you had mentioned, not being surprised by ABN AMRO being up at the top, given the fact that it's been using the UN Guiding Principles reporting framework developed by Shift and Mazars. Can you speak a little bit more to this linkage between reporting and performance?
I think generally, the ones that are willing to put out more information, I think that have had a more sophisticated and frankly, just they've had a longer period of time where they've been looking at these issues and addressing them. I do think speaks to, is somewhat linked to performance. I'm not saying it's always linked. I do think that one of the gaps we always see in these kinds of indicators and a public index like this is that you need to actually link it to performance, and sometimes that's really hard to do. because the disclosure is so kind of dispersed. It's not standardized, and so while I think it's important to look at the link between disclosure and report and performance, frankly, we just need to get more of the banks to report. And I would support Ryan and many other entities' calls for mandatory disclosure. And I think this is an area that investors really should focus their attention on in 2020. And also leverage the existing disclosure that already exists through many of the modern slavery acts across the world, and things like the EU directive. So I think there's a lot more information that might be coming to light through mandatory disclosure on these issues, and I think we need to broaden it to other jurisdictions like the U.S.
Great. Thanks so much, Lauren. Actually, that's a great segue into one of the other questions that came in. Just to be explicit, do any current EU member state legislations on mandatory human rights due diligence cover bank disclosure? If not, are efforts underway to include banks and other financial institutions? Lauren, I'll ask you to clarify that point first.
So I'm not 100% sure. I do think though things like I'm not sure if the banks are actually under things like the UK Modern Slavery Act. That's not something I've looked at recently. Ryan, you might have a better understanding of that.
Ryan, go ahead.
Sure, and from reviewing all of the disclosures that banks made, and what we can particularly sort of shed some light on is where we saw that legislation had some kind of impact on what banks are doing, and the Modern Slavery Act does have an impact on banks, and I think the majority of banks covered in this report produced a modern slavery statement, which is quite remarkable considering they have to be doing business in the UK for that act to apply. So that's we saw very few Modern Slavery Act statements which added to what we already knew through banks reporting, but there are some of the banks that score 0 or half a point in this benchmark that were forced to report something and were forced to consider the issue of modern slavery, including at board level, as a result of the Modern Slavery Act. So that's something. There's also the French duty of vigilance law. We were surprised, frankly, at how badly the French banks did in general on this. I mean, they're spread through. I think BNP Paribas is it's towards the top of the followers table, but then Société Générale is and Crédit Agricole are both in the bottom group. And Friends of the Earth France have looked into the impact of the duty of vigilance law on the French banks and found disagreement among the banks about when the act should apply. I think the act is more promising in that it allows communities affected by large French corporations to raise legal complaints where the duty of vigilance hasn't been met. So far, we're not seeing it impact on reporting. We see statements from 2 of the 3 French banks, but one of them hasn't reported at all under the French duty of vigilance law, and even where they have, the reporting doesn't stand out as particularly advanced. And if it's worth adding just to the question about legislation in the EU, the Dutch banking sector agreement, the covenant, came up once or twice, and it's not a legislature, it's not a piece of legislation, but legislators are involved. It's not perfect, and it's coming to an end this year, but we did see, I think, a solid advance from the Dutch banks over the 3-year period that was in force.
Yeah, I think I definitely also saw more sort of advancement in with the Dutch banks, given that they were collaboratively together. I mean, ING, Rabobank, ABN AMRO we're working on very specific kind of projects that were linked to this issue. As I reported out on some of the kind of the key commodities, for example. I think, to your question about the French banks, because I also was very surprised, because I naturally correlated good performance on climate and really advanced performance on climate risk assessment and policy development. I thought it would naturally follow that human rights would be integrated into that, or would also be reflective. So I think there's something to be. I think it's something to look at further in terms of perhaps the priority leading up to COP26 has really been highly focused on climate, and I think that's also been the guidance put out by the French government. So I think government tone and tenure on these issues also plays an important role, and perhaps we need to convene a conversation not just with the regulators but also the central banks to think about where our other influence points might possibly be.
Great, excellent. Thank you both. And that naturally answered another question that was asking about the regional differentiation. So we have just 5 minutes left, so I'm going to wrap us up with one last question that I think is great to end on. It's about carrying forward engagement with banks on these findings and human rights due diligence in general in this sector. So in addition to sending a request for dialogue, what have you learned about how best to secure active engagement with portfolio banks? And I think related to this is another question that came in saying, can we take learnings from apparel, perhaps the tech sector supply chain responsibility efforts to overcome this piece, Lauren, that you highlighted on banks being nervous about legal liability, fear in carrying out human rights due diligence and remedy. Ryan, you spoke to that as well. So from you both, Ryan, I'll start with you. Given BankTrack's experience in talking to banks, what are your learnings in how to best engage, and then other learnings from other sectors on the remedy piece?
It's a challenging question because we find, frankly, we're quite dependent on banks' willingness to engage, and we've engaged with a very broad number of banks as part of this. We've invited responses from all 50 banks, and there are some banks that are serial non-engagers, and some banks that have engaged with us for the first time. Banks have been. I think most of the larger target banks are happy to have conversations with BankTrack. This is as a constructive partner for dialogue, but as to how to bring that engagement about and advance it, I think investors are in an enviable position in a way in having that leverage and that ownership stake.
Great, thanks, Ryan. Lauren, your thoughts on that?
Yeah, great. So I would say that our best dialogues, I hate to say it, have come out of controversy. So I would say that, post-Apple controversy, the Dakota Access Pipeline, many of the banks were willing and in fact, in some cases, sought out dialogue with us, given the lack of sufficient human rights due diligence around that project and the ongoing kind of controversy. I think the other place it's probably easier to open up dialogue again are on those priority issues. For example, we've seen many dialogues start around, again, controversy, whether it's the financing of private prisons or gun control here in the U.S. and the link towards finance, or for example, where banks are formally part of a process like RSPO and are in fact engaging clients on the responsible sourcing of palm oil across regions. I think also some banks are a little bit more open to having a conversation, or they know they have a lot of significant exposure when these issues are actually happening in their backyard. So I think it's really interesting to see, for example, Standard Bank as a new bank in South Africa, kind of in the middle of the pack, right? For the first time. And that's not surprising because of where their operational and financing footprint is in South Africa, or even Itaú. Having to deal with issues, for example, in Brazil. So I think sometimes where they're placed, it also allows a little bit more open dialogue because they're dealing with these issues on a day-to-day basis. It's not something that's happening, across the world, or in one subsidy, one kind of regional location. So yeah, using controversy, using examples of other banks that have faced controversy. So it doesn't actually have to be a controversy or a case that bank itself has faced. Sometimes it could be one of their peers and wanting to then maybe perhaps allow the bank to distinguish why they didn't have the same exposure to that project.
Great, excellent reflections. Thank you so much, Lauren. So we are at the top of the hour, so I'm going to wrap us up here. We fortunately got to all of the questions. I think there was just one last one on what social media handles and hashtags can we best support the benchmark around. So Ryan, we'll work with you and share across our membership those materials that can be shared so that support is maximized. Also, just a flag, we will share with all of you as well as via the Investor Alliance listserv this statement for sign-on with the sign-on dates and relevant details there. So take a look for that. We will share the recording of this webinar and the slide deck as well, and please share that amongst your networks. So again, we just thank you all for participating. Special thanks to Ryan and Lauren for their inputs, as well as to Anita for helping us facilitate, and looking forward to carrying the discussion forward. Thanks, everyone.
Thank you very much.